So one of the questions people ask me the most is, are retirement annuities a good investment? Now, there's a lot to say about retirement annuities, but I just want to focus on one widely known but not very well appreciated feature of retirement annuities that gives them an amazing wealth multiplying effect. So this isn't going to be a balanced overview, and it's not intended as advice, it's educational. So here's the thing. Retirement annuities offer a huge tax advantage. Most people know that contributions to retirement annuities, as well as pension funds and provident funds, are tax deductible, but they don't fully understand the extraordinary advantage that this gives you. Now, to understand this advantage, you have to understand a little about income tax. I'm going to take just a moment to explain that to you. So the taxman looks at your income in bands known as tax brackets, and you pay lower rates of tax on the portion of your income that falls in the lower bands and higher rates of tax on income that falls in the higher bands. So if you look at this chart, you can see that in the first tax bracket, these are annual incomes up to 226,000 Rand a year. This is the 23 tax year. You would pay 18% on that portion of your income. If you earned more than that, in the next bracket, the portion above 226 is charged at a higher rate, while the portion below 226 is still charged at the lower rate. And as you earn more, the last few rands that you earn is exposed to higher and higher tax brackets until eventually you're paying 45% on the last few rands that you earn. So that's the foundation that you need to understand the impact of tax deductions. When we say an amount is tax deductible, it means that the amount is deducted from your income before tax is calculated. In other words, it means you're taxed as if you never earned that amount. So you don't pay tax on that portion of your income, and there's a tax saving as a result. So for example, if you were somebody who was in a 45% tax bracket and you decided to invest 10,000 Rand in a retirement annuity, you would have paid 4,500 Rand if you had paid tax on that money, but because it was deductible, you pay no tax. The result is you've saved 4,500 Rand in tax, but you still have 10,000 Rand invested. So what did it cost you to invest 10,000? The real cost of investing 10,000 Rand is the 10,000 Rand that you paid, less the tax that you saved. And so it only cost you 5,500 Rand to have 10,000 Rand invested. So that's part of the story. That's what a tax deduction does for you. But let's go one step further and have a look at what it means to invest in something which is not tax deductible. So it could be anything. It could be investing in paying your bond off early. It could be buying some unit trusts. It could be buying some shares. It could be buying Bitcoin. It could be saving in a bank account. In those cases, you will always make those investments after you've already paid tax. And so let's show you what that looks like. So any other non-tax deductible investment. In order to invest 10,000 Rand, you would have first have to have earned 18,182 Rand. And after paying the 8,182 Rand tax, which is at the 45% tax rate, because it's non-deductible, you would then have actually spent 18,182 Rand to get a 10,000 Rand investment in place, compared to the retirement annuity where you would have actually spent only 5,500 Rand to get a 10,000 Rand investment in place. So you could then say that the retirement annuity advantage to you is the difference between those two numbers, which means you get a 12,682 Rand advantage by investing in a retirement annuity over investing in absolutely anything else. Right, so this table shows the real cost of investing 100 Rand for each of the tax brackets so that you can relate it to your own earnings and get a sense of what that advantage would look like in your case. So we go through the different tax brackets. In the lowest tax bracket, which is somebody earning up to 226,000 Rand a year, your retirement fund advantage to get 100 Rand invested, you're 40 Rand better off. Then there's the next tax bracket where the marginal tax rate is 26%. You see that advantage increases. And so we go, 31%, the advantage increases further, 36% marginal tax rate. you would have had to have earned 156 Rand in order to be able to get 100 Rand invested. Unless you invested in a retirement annuity, it would only be 64 Rand that you would have need to have earned. And so you have quite a big investment advantage there. And you can see at this point, the advantage is already bigger than the amount invested. That's what makes this thing so significant. And that's per contribution over the lifetime of the investment. And the advantage increases as your earnings increase over time. So eventually you end up in the 45% tax bracket where your advantage is the biggest. So you can see how just at the contribution stage already, you're getting a massive advantage from investing in a retirement annuity. But that's not where it ends. There's actually more. Right, so we've talked about the tax implications of contributions, which were stupendous, but there's more, and that's the tax implications during the life of your investment. And once again, we'll compare retirement annuities with pretty much everything else. So here we go. So with retirement annuities, during the life of the investment, so over the years while you're busy accumulating capital, there's no income tax on the interest or the rental income that might be earned in your investment portfolios, and there's no capital gains tax when profits are made selling shares or trading shares. Now let's look at other investments, pretty much anything except for tax-free savings accounts. In those cases, interest or rental income is taxable as normal income, and whenever you trade shares and make a profit, you generate taxable capital gains based on the laws at that moment in time. So not only do your retirement annuities offer an advantage when you make a contribution, but they also offer an advantage on the growth that takes place within that retirement annuity over time, widening the gap, widening the advantage that retirement annuities have over other investments. Right, so you've received tax benefits contributing to your retirement annuity. You receive tax benefits during the life of your retirement annuity. And the question is, what happens when you finally get to retirement? What happens then? So let's have a look at retirement annuities in comparison to other investments at that point in the journey. So with a retirement annuity, at retirement, you're allowed to take up to a maximum of 1/3 of that fund in cash. Now, if you do that, there's some tax implications. The first 500,000 would not be taxed, but everything in excess of 500,000 would be taxed according to a sliding scale, which caps out at 36%. So never higher than 36%. Whatever you don't take in a lump sum will get transferred to a pension to produce your monthly income, and that income is taxable per the tax tables. Now, if you think about it, the vast majority of people earn less income in retirement than they do while they were employed, which implies that they should be at a lower tax rate in retirement, which means that your net position between the tax deductions you've received during the life of the retirement annuity and the tax rate that you're paying at the end should leave you with an advantage still. And most of the time, it's quite a big advantage. Now, what happens with other investments? So any other investment during its lifetime would have had tax on any interest and rental income that it receives, and it would have had capital gains tax on any trading. Now, as you make withdrawals to create income for yourself, those would be sales of assets, and as a result, you would get capital gains tax applicable then. So it'll just increase compared to during the lifetime of the investment. And any interest or rent that you earn, even if you don't draw it as income, will be taxed within those structures. So it doesn't change at all, but there's always tax throughout the whole journey. And so when you look at all the stages of that big picture, the retirement annuity offers such a massive advantage that it can't be ignored as one of the building blocks of your portfolio. I'm not saying you should rush in and buy one. There's more things to consider. And I'm saying that what you should do is consult with a financial planner, look at your big picture, and make a wise decision. There's more information to know. There's more factors that need to be brought into account. I'm saying definitely something amazing about retirement annuities, worthwhile having a look at. So if you'd like to explore investing a little bit more, whether it's RAs you're interested in or anything else, here's how I can help you. I'm making 2 15-minute slots available every week to have a free exploratory phone call or a virtual coffee on Zoom, and I'll be able to answer any questions that you might have. I'm not going to charge you anything, and there's no strings attached. I really do love talking with people and sharing knowledge, and I'll always do my best to help you. And if you'd like to do that, Why don't you click on the link in the post? It'll take you to my diary where you can schedule that meeting at a time that's convenient for you, and I'll get back to you on that day and time, and we'll have a friendly conversation and see where that leads us. Looking forward to hearing from you.